All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on May 22nd, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's going on, Yoda? Ready, set, go is right. Hope you're doing well as well. Let me know if you guys can hear me coming through loud and clear. But otherwise, everything is looking good. Go ahead and jump right in. Appreciate that, my man. All right. Just getting everything situated here. Go ahead and jump right into our charts. Have a look. Not a lot has changed, obviously, in the equity markets from Friday, but we want to talk just a little bit about the closes and what they meant. Even though we talked about it ahead of time, it's good, obviously, to look back now and see what they have done, what they have told us. So first we have TNX. So we did put in a new low here. We did all but confirm on a daily that we'll be getting an 821 cross. No surprise, obviously, as we have the hard sell, left the bullish control zone, all red histograms. Could see a pullback all the way back to the 2.0 level. Would not be a surprise, but there's obviously some steps down in the meantime. As far as the bond market, TLT did close back above support now. At this point in time, it is basically at resistance, which was the previous level that it bounced back up to, put in a higher low. So when we look at this up close and personal, you know, as of now, it looks like this wants to go higher. We're now holding the bottom channel support. You know, a little move up right here would reclaim the bottom of the descending channel support. And at that point in time, we could potentially get that move back up to around like the 132 level we've been talking about. So it does look like short term with this bullish divergence and everything else we just talked about. It looks like the bond market is trying to put in at least a temporary bottom. U.S. oil retested the channel as resistance, came back down to the heart line, found support, came back to like the neutral area. So for now, this looks strong still, even though we're inside of, you know, what appeared to be a distribution pattern. It still looks okay for now. It is holding. We are starting to see that final drive, or, you know, fourth drive of bearish divergence developing, though, as now we have two red histograms. It has curled down, and it's a lower high than this previous high back here. So now when we look at it, or I'm sorry, I think it was only was it two drives of, it was the second drive of divergence, because we basically have a double top right here, and this is substantially lower than the previous top. So paying attention to this for now. You know, and again, here we have the top right here at 80 at the bullish control zone, fails to enter it. Here we went slightly inside of the bullish control zone, and then that corresponds to these two tops, which are the same level. So again, we're seeing like that, you know, second drive now, and it's forming bearish divergence at resistance. So we're definitely still getting kind of like a mixed signal, potential divergence developing, or at least showing itself already. We don't know if that's going to play out exactly to a move to the bottom of the channel, to the heart line, a break, but at least we're seeing right now that there are definitely some distribution signals taking place inside of this pattern. So for the short term, at least. Dow Jones, so the daily closed at the lows of the previous, or at the previous close. So, you know, this is our new low. We did have a wick down that got bought up fairly aggressively. Saw a hard buy signal coming in, but then we started rolling back over the histograms. We're below the 200s, below the 8 and 21. When we go to the weekly, though, you know, it shows a much more bearish picture. We showed some support the previous time, getting bought back up at least, and it looked like maybe they were trying to carve out a bottom. But this right here, we did have a little bit of indecision on the top and bottom, but we have a big, hearty red candle, hard sell signal, just flipped on the weekly, and then a bunch of red histograms. So at this point in time, it's pretty clear where the next target is, coming down to 200 exponential and simple on the weekly. So looking for that 29,000 level. And next we have S&P. So closed slightly different on the daily. So we essentially revisited those lows. We put in a new low, but it wasn't our last candle. But again, when we flip to the weekly, we get a much clearer perspective. As you know, we have a very similar looking candle, very similar looking rationale. As someone could argue, this was potentially going to be a bottom, or at least an attempt to put in a temporary bottom. And then the follow through is just complete, meltdown. So we didn't close all the way at the bottom of the wicks, but again, new weekly candle closed low. And again, that's the close of 7 weeks in a row. And obviously coming in on a Friday close, bearish weekly, getting towards the end of the month, it's going to be tough to turn this around and make it look anything but bad for like the monthly close now as well. We'll see. That many weeks in a row, do we get some kind of dead cat bounce? I mean, I guess maybe. But again, the target's still just going to be like 361 and 347. We can take a look at the monthly real quick. Pretty brutal with what amounts to, 1 week left in this month. Clear breakdown from the 21 after a rejection to retest the 8. So, the real question is, are we going to continue to get follow through? Probably. The trend is clearly down now and below support. We could likely get a retest back up maybe next month, retest 409. And then we'll see if it gets rejected then. But now we're starting to get close to this 821 cross. And again, the last time we've seen that take place was, the big dumps, 2008 and 2000. So again, if that takes us down, it likely takes us down much, much deeper, potentially down into the 200 exponential and simple on the monthly, which look very bearish at the moment as well. So even the longer time frames are starting to look pretty rough. And then we'll just glance over the NASDAQ. Again, very similar. Closing down near the lows, not exactly at them. But we go out to the weekly picture, a much more bearish picture. We now have retested the 200 exponential on the NASDAQ. 200 simple is slightly lower at 10,763. No signs of bottoming for now, although we are at support. Our previous low for that Rona dump was a retest of the 200 exponential and simple on the weekly. So we would expect, after each of these tests we've had along the way up here, we would expect the 200 exponential and simple to hold as support. The last time they broke was back in that 2008 breakdown. So if we lose those levels, that's going to show capitulation taking place and probably be at least the short-term end of that weekly trend. So while I don't want to call the end of a trend that's been going on for 14 years, any lower price action in the NASDAQ and the market's calling the end of that trend for us, as we're starting to get into like weekly bear market territory if we're much lower, as the slope is already almost flat on the 200 exponential and simple. So definitely showing signs of whatever you want to call those, big events, 2000, 2008, even more severe potentially than what we saw in 2020, which wasn't as severe time-wise, but depth-wise was a decent correction. So Russell next on the daily still looks very bad. We did close down near the lows, again, not completely at them. But again, if we just switch out to the weekly, we see again that very, very bearish picture. The retest of the 2018 highs, as the Russell didn't even put in a new high in 2020. We are now below 200 exponential on the weekly, below 200 simple on the weekly, and the 200 exponential has already flipped over the slope line red. So very close to flipping that over red. We're seeing already the Russell show slightly more weakness than the NASDAQ, which again, a little more weak than the S&P and Dow Jones. But overall, indexes not painting a rosy picture at the moment. They've looked pretty bad on the daily for a while. The weekly now is starting to look very bad as well, and we're seeing some of that bearish divergence play out. XLE closing near the highs, again, very strong. Starting to see that potential for the fourth or third, however we want to count it, drive of bearish divergence. 2 red histograms in a row on the daily tells me that this is likely at least a short-term top. And we see that we've had a higher high each of these previous highs and a lower high on the indicator oscillators. So if this does in fact roll over, just one more drive of bearish divergence telling us we'll likely see some kind of retracement again, which I think will be a buying opportunity on energy. XTN, transportation, closing at or very close to the lows at the bottom of our descending channel, still very much in bear market territory. Starting to look like there could be some potential support around this area as we have so much lining up. We have the bottom of this descending broadening wedge. We have the 200 exponential and simple moving averages. We have the green 382 Fibonacci. We have the blue 236 Fibonacci. And then we have our yellow support line as well. So quite a bit going on here at this level. Just a whole cluster of support, which is where we would expect, you know, this is a similar scenario. We break down from the channel. We put in basically a double top. And then we hit the 200 exponential. We bounce it quite a few times over the next, you know, year or so. And then we finally have a capitulation move through it. So to me, it looks like energy could easily do a similar type thing, sort of start to flag out. Maybe this is kind of our flagpole situation. We come down here, we chop around and sort of start putting in an ascending channel before we finally get a breakdown. And then we can reach those lower potential levels that we're looking at. So that's what I'm paying attention to. You know, again, don't want to just assume that we're at the bottom on these things. But after, you know, 7+ weeks of downward pressure and not even like one weekly candle, and we're starting to get to like big clusters of supports on a lot of these equities, we are still obviously in a bear market. I don't expect that to change anytime soon. It's not like it's going to happen overnight. We'll see it change. But I do think that it's time to start looking at some of these weekly 200 exponential and simple moving averages as potential bottoming areas, especially when they're lining up with Fibonacci's, not for a macro bottom, but for some sort of decent bounce. Even if it's a week or 2 weeks long, we could easily see something like a 10-20% bounce in indexes or various stocks, more so in many of these stocks that are just beaten down, things like pot stocks and stuff like that. If we do get a scenario like I'm discussing, we could again see those 50% bounces that are great for extracting your capital from the market right away and then starting to build a position, you know, for free, basically paid for by the market. So that's what I'm looking at with a lot of this stuff. Again, not trying to pick bottoms by any mean. I don't think this will be like the macro market bottom, but I think after 7 sustained weeks of downward pressure, I think that we should start really looking for a place to at least temporarily deploy some capital for some of these rebounds. Could potentially be a, you know, crypto equity market. Maybe we see a little bit of a shift where what's weak is strong for a little bit and what's strong is then weak for a little bit, which kind of lines up with some of the macro thesis for like short-term energy retracement that I've been looking at. So paying attention to that. Again, not going to jump the gun on things and just recklessly start buying because things are down, but they are pretty beaten down, at least for some kind of counter trend rally, which, you know, if the bear trend on the daily is what we're paying attention to, we're talking about a potential like short-term bullish bounce. So financial sector, again, closing at or around the lows within a day or so, looking pretty beat down for XLF. And then we look at the weekly, we're basically, you know, at this pace, we are like a week away from our 2020 highs and also the 200 exponential and simple. Some of those key levels just all lining up here again. So the 382 would be slightly lower, around 30 bucks roughly. So still a little ways to get there, but again, we see how everything kind of is lining up around this area. And, you know, we're within a couple percentage points of those areas. So we don't want to get like super greedy or miss an opportunity for a scalp here. XLV, healthcare, now confirming below the 200 exponential and simple. Looks like at least short-term rejection off of them. We'll see what happens now if it can build some support and kind of move back up. But I really would expect a lower high if and when they can get back above the 200 exponential and simple, which are both sloped to the downside at this point in time. You know, healthcare may not be the safety play everyone was hoping or expecting if this chart starts to play out. But we do still have potential for this to push back up and put in sort of a right shoulder for like an awkward kind of, two-headed head and shoulders, which is valid psychology-wise. So we'll see how this looks on the weekly. Just basically holding at support for right now. So we could just see a breakdown at any point in time. Maybe we see a pushback up and then it rolls over and we get that weird kind of head and shoulders pattern. But it really does look rough right now. And again, we see 1 drive, 2 drives, 3 drives, 1, 2, 3 on the weekly chart, and then on the stochastics as well for bearish divergence. So this looks probably ready for a breakdown. So it looks like healthcare is probably not going to be the safety trade that everyone's expecting, at least based on what the chart's telling us right now. It's basically confirming into a bear market with a bunch of bearish divergence, looking like it wants to just have that bloody waterfall. XLU utilities holding at that support level again. Nothing has really changed on this. Just hanging out, looking very strong in comparison. So, this is kind of the scenario where we really have to look out for on healthcare. Something like XLP, where we basically just saw, price action just completely let go. Now, it is already below the 200 exponential and simple, but it hasn't quite flipped them over red yet. But I could fully see a scenario where it basically gets just a big, thick meltdown candle like that. So XLP, how does it look right now? Not good. I mean, we closed daily lows day after day after day. And then the weekly, we have just as much selling pressure at the top of the candle as we did at the bottom. And just all red, a sea of red in between. Looks very bad. And, we see that's basically just our bearish divergence playing out after finally, coming up here to our target. So it really looks like 68, probably 65. There's a decent amount of chop in between that level. So if we do come down here, I would expect, I would expect it to take a decent amount of time kind of chopping around here if it goes lower, or if the 200 exponential and simple catch up to it. After that big candle right there, I would not be surprised to see follow through, on a weekly chart. We didn't see buyers stepping in towards the end of the day or the week. So it just tells me, that same thing we always say. We didn't run out of sellers, we ran out of time. XLRE. So real estate, broke down pretty harshly, new lows, confirming into a bear market, trying to put in some short-term bullishness, a little hard buy coming out of the bearish control zone. At a key support level, that was our peak in 2020. We basically have just, got that retest back to 2020 highs. Or I guess technically, pre-Rona dump highs, not really 2020 highs. We're just a slight little bit away from the 200 exponential and simple on the weekly. Do we kind of get that push down and then bounce the stochastics here? Or do we just break down and go lower? I really think a lot of this market is basically just beaten down to the point for a temporary bounce. So if we don't see some immediate strength, I'm going to really be looking out for turnaround Tuesday this week. If not, it'll be next week. I'll be really paying attention, as it'll be, essentially a new month. So DXY, basically down at that key support area we were watching for. Looks like it's ready to let go and give back a little bit. So we are at that Fibonacci level. The next breakdown level would be our breakout previous high and a retest of that. Seems likely at this point in time. Depending on how long this kind of weakness plays out, we could potentially get that retest of the 200 exponential and simple. I do expect this to go higher. Over time. But it wouldn't be unrealistic to think we get sort of that retest of like 101, 102, retest of our previous high, kind of breakout levels, some of these weekly closes. Maybe, the stochastic comes back down to like the 80 level, almost has a negative cross or almost leaves the bullish control zone and then gets a little bounce. I could see a scenario like that. It's still really bullish long term, but shorter term, daily, and even into the weekly, it's starting to show a little bit of weakness. For at least a consolidation. You know, it's not often you see a breakout and then you either see a retest and then follow through or a failed breakout. You don't often just see a breakout and then just consolidation. So I don't think it's going to take a long time for us to know how long, you know, if we're going to see follow through or not. You know, at this point in time, if we see 2, 3, 4 weeks go by and we don't see any kind of follow through on the DXY to the upside, we may see that break back down and it be a failed breakout, you know, and kind of change the thesis a little bit. But I suspect that we will see that follow through. It's more important, I think, that it holds. And if it holds, I think we get a powerful move to the upside, which is going to put a lot of pressure on markets. But that kind of lines back up with potentially the DXY showing some weakness, equity showing some strength over the next couple of weeks, and then seeing more of the same that we've been getting recently, which is equity weakness, DXY strength. So Tesla, new low on the dailies. Back down at the bottom of our, you know, yellow support. It could get a little more follow through. We do have a target slightly lower at the 236 at $536. Looks like it's headed there. Looking at the weekly, it looks like it's headed there. So we lost that key level on the weekly. So, you know, once again, this was our key level for support previously, or resistance, I'm sorry, that acted as support. So then losing that support, it would make sense that we kind of chop around a little on the way down. But our next key support is somewhere in between this 236 and maybe slightly higher, about 570. So maybe we can move the top of the box just slightly higher. So somewhere between like 532 and 570. And again, that's going to line up perfectly with 200 exponential retest, potentially 200 simple, depending on how long it takes to get there. But when we zoom out and just look at this chart, it looks pretty obvious where the price is going. It looks very obviously headed to the 236. So 530. Now, what will that look like when we get there? Is that going to be a buying opportunity? I mean, there's definitely going to be a potential for a counter trend scalp from that level, but I think it would realistically probably underperform and just be a retest of that 770 level, but still 430%, I'm sorry, 43 rather percent move to the upside. So that could be a nice scalp off that level. So I really will be looking at that, especially as Tesla has held up, you know, better than most things in the market. ARKK, very, very weak, closing near the lows. No bullish divergence here. Slight bullish divergence here. Looks very bad on the weekly, daily rather. Weekly has now confirmed into a bear market, so slope has flipped on the 200 exponential and simple. We're at a pretty serious support level. You know, there was literally years of sideways action at this level. So we have given back, you know, all the way back to 2018, you know, almost 5 years worth of gains are gone at this point in time. So this is a complete disaster for an ETF. So I mean, you know, is it going to bottom in this area? I mean, your guess is as good as mine. I would expect this area to hold for support at least for a while, but the last thing we want to see is just constant weekly lower lows on a close, or, you know, a wick is not as important, but on a close basis, you know, you're trying to put in a bottom right here with this big wick, and then we just get another lower close. Now, it's not terrible. There is quite a big volume spike on that candle. So could that be a tradable bottom? You know, we saw a volume spike right here. That was a bottom. We saw a volume spike right here, you know, at the top right here, and then again kind of at this bottom. So it is possible with this volume spike that this is at least a tradable bottom. And again, key support levels, I mean, basically, you know, an 88.6% retrace of that move. But again, there's just a ton of support right through here. So we may see some potential useful action in ARK. And it could gain a lot of momentum if it saw any kind of real bullishness. So that's definitely one to keep an eye out for the next like couple weeks to a month. ARKK, pretty beaten down again too. So NVIDIA, again, closing at or around new lows. I mean, these markets obviously look very weak at this point in time. New weekly low, headed down to our target. around 136. And again, we're seeing that confluence almost on, I mean, just so many charts are just starting to look almost the same now. Apple breaking down below our yellow support, but finding some support at that red Fibonacci level. So we are at the 236 on the daily. So Apple showing some weakness after holding up pretty well. Now this is a strong support level, as that was our resistance previously. We would expect it to act as support at least for a couple weeks in some sort of attempted bounce. But we are seeing a bearish rejection on the weekly stochastics. You know, red slope and bear cross below the zero line, all red histograms. 821 have crossed to the downside. So this is showing some extreme weakness. We may not find that support on some of these ones that have held up better. We may find that the 236 doesn't act as support like it did on a lot of the other like weaker assets. And we do just get a flush down to the 382. So, and again, lines up with the 200 exponential and simple. So, you know, not unrealistic to think that we're looking at a short 1 to 2 week bounce in these asset markets, bullish bounce, followed by, you know, another couple months of just continual selling through some of these support levels. Google. Looking pretty similar. Already broke down from the 236, halfway to the 382. Again, just another lower weekly close. And again, we see that same confluence with the 200 exponential and 200 simple lining up pretty closely with those Fibonacci's. Yeah, definitely not looking to call the bottom on these things, but I think we're probably going to see some bottoming behavior in the next week or so, short term, and definitely going to be some opportunity. Amazon closing below our weekly 200 exponential and simple and just melting down. 200 exponential is now red. 200 simple is basically flat. We busted through the 382. Man, there's so much weakness from Amazon. You know, which we now see reflected the same way in our retailers like Walmart and Target as well. So, you know, Amazon was in many ways the canary in the coal mine, as we discussed many times, because not only was it suffering from, you know, everything retail was suffering from, but it was also suffering from the sort of extra cooling effect of the stay-at-home trade. So people were not staying at home as much. They were much more active and out and about. So retail didn't feel the pain as badly as online retail, because if they weren't, you know, in front of their computers or bored or on their phones all day, ordering stuff, buying things, they were out and about spending money on, you know, tangible goods in real life as opposed to mail order goods on the intraweb. So, you know, in very many ways, Amazon sort of gave us that canary in the coal mine, as it was the stay-at-home trade being exhausted, as well as the online and resale, like goods trade, being exhausted. So as we see the shift back to like the opening trade, we see the same shift taking place in regular retail versus online retail. And then again, we see the weakness in spending and all of those things being reflected. You know, also like the kind of shift back towards travel and services over just buying things. So very interesting how that has played out. But Amazon just very rough here. You know, back at its 2018 highs. So it did find support where we would expect. It is now between the 0.5 and the 618. And it did touch our 2000 target. So we don't want to get overly bearish on Amazon, because what we're looking for, the same way we looked for the reversion of the mean trade on the daily, as we saw this pattern taking place, the distribution, the loss of a 200 exponential and simple, we then found support and then got our reversion to the mean play, which obviously we have our red box already in place, and that's essentially looking for that trade. So we hit our blue box for support, which would be our buying opportunity for a potential scalp or position, depending on what our time frame is. But then our potential resistance off of that trade, or the potential scalp play, the reversion to the mean play of the retest of 200 exponential and simple, confirming that we're not going to hold support. We're not going to stop the bear market on the weekly from taking place. And then we would expect continuation back to the downside. In Amazon's case, though, that is a 17% move. Not to mention, overall, even though it hasn't been a top performer as of late, the last year or so, couple years, it is very strong and has been holding up at least better than most. So the likelihood of getting this move to at least perform to the bare minimum retest of the 382 and the 200 exponential and simple is more likely than something that's just been, a dead heartbeat essentially. So the same way we looked for some of these trades previously, I think it's probably time for us to start looking for this potential reversion to the mean play that we've been talking about on our weekly chart. Now, depending on how we're going to do this, if we're going to go from the current support and current low, which was the most recent candle, that's not really like a viable level for our stop loss, as we're basically just putting in new weekly lows. So we would expect a new weekly low again. So I think we would have to go either off of the blue support, which was the previous resistance for that consolidation phase, or the 618, slightly lower. Unfortunately, the risk reward ratio, if we go all the way down to the 618, is just not going to be favorable. So there's a slight higher possibility that we would get stopped out on this trade. I mean, it's basically a 2-to-1 risk reward. But I mean, if we wick down lower, I'm not sure that we really want to be in this trade anyway. Realistically, what it comes down to, I think, is we just have to get a slightly better entry because there's not enough meat on the bone where we're at. Because I really would rather take an entry off that level. And if we would have just took the entry already, we would be sitting pretty, because that tightens up the stop quite a bit to where we can keep it at the 618. And then we still have plenty of meat on the bone back to the upside for the retest of the 382. So now that's a 19% upside with a 7% stop loss, or a 3% or 3-to-1 risk reward ratio, which is more favorable in a counter trend trade. So that's really what we want. So we want to get the entry that we were looking for, expecting, but just didn't take advantage of. So if we see a little more downward pressure, I think we'll look for some short-term bullish divergence and look for that to be a potential buying opportunity for around a 20% scalp on Amazon, which I then expect to get further downside, honestly. So we'll keep an eye on that one. It's definitely some opportunity developing on quite a few of these charts. So Microsoft closing at the lows, breakdown, almost to our target at this point in time, our next Fibonacci level. Let's just flip out to our weekly here. So very close to the 382. Still a little ways to go for the 200 exponential and simple. Quite a bit of support around this level and slightly lower. Just now putting in a weekly sign of bears being in control as we do drop below the 20 level on the stochastics. So still looking weak. This held up really, really well, and now it looks very weak. But again, is the 382 going to be where we bounce? Maybe not. Maybe it just pushes straight down to the 0.5. But when it does, I think we get big bounce on this one as well. So is it going to be from the 382 level and we get a similar setup to what we were just discussing on Amazon? 15% back to the upside. Yeah, definitely potential. And a couple of these big names, again, I think they've been holding up better. So if we're going to take some scalps, they may not have as favorable risk reward, but I think they're more likely to play out. And then Walmart, again, just closing at the lows. So we really just have to give this time to develop now after this, complete destruction. But close below 200 exponential and simple. 200 exponential is already flipped over. I would wait and see how the next couple of weeks go and see if we hit our next target to the downside before we look for like a pop back up. But again, we'll be looking for sort of like reversion to the mean place, retest of those 200 weeklies for the ones that have already broken down from them. And then target, same thing. We lost the key level. When we look out at that weekly close, very, very bearish. Came all the way down to 200 simple. 200 exponential has already flipped over. You know, we probably have some resistance now, some pretty heavy resistance at the 200 exponential and the 236. So the real level to watch will be getting back above 163. But again, the momentum is really building now to the downside. So we don't want to just start picking bottoms on these things. The way they blasted down in such a hurry, you would almost expect them to get some kind of move to the upside. But markets can be very unforgiving. So a lot of times when you see a complete meltdown, especially a gap down like this, instead of going back up and then coming lower, they actually just continue to kind of melt down as no buyers kind of step in. So the sellers just start to accelerate. And then eventually we get some kind of capitulation at a key support level, maybe the 382. So definitely is some possibility that we're nearing the bottom on these. We're seeing some clear signs that the bottom may still be, you know, a big drop away. We jump over in the chat here. So what's going on, Yoda? Good to see you, Honkiness. Hey to you as well. Sotos, good to see you. Hello, brother. CW says, hello, friend. Thanks for the coverage. Of course, man. Good to see you. So let's jump into our commodities and our cryptos here. Give me just 1 sec. I'm gonna grab a drink, and then we'll keep ripping. All right. So gold. So we did sort of see rates and the DXY kind of letting go a little bit, giving back some. That did allow gold to get a little bounce over the last like week or so. A retest of a 200 exponential. Looks okay on the daily for a little bit of upward momentum. Probably a retest of the 821 cross on the weekly, maybe like high 1800s. But we really didn't want to see that happen again. Really wanted to see that level hold. Obviously wasn't expecting it to hold. But as of now, we do still just have a higher low. We are starting to see some weakness on the weekly though, as we have lost the 200, or I'm sorry, the slope line, and it has flipped over red. All red histograms, hard sell, you know, stochastics angled to the downside and accelerating. You know, even if we just go sideways for a couple of months on gold and that just lets the 200 exponential and simple catch up, I mean, that doesn't make the chart look much better, but, you know, at least it wouldn't be like new lows and like a big breakdown. But, I mean, gold doesn't look particularly great here. It's starting to look a lot like distribution and, you know, sort of reminder of that 2011 level. And silver looks very weak. Broke down to new lows, retested them as resistance. They're acting as resistance. We're seeing again the daily chart starting to show some strength, trying to build some momentum, having some bullish signs as we hit the 200 exponential and almost the 200 simple. Again, looks like momentum is building to the downside. And we should expect further downside potential. And the weakness in silver is probably the canary in the coal mine for what we can expect in gold. Although the silver play may be a little more to do with, you know, potential demand in like commodity space over like the real money sort of safety trade. So if we start to see the economy slow and production slow, we may see demand for silver slow, and that's being reflected in the price. And that's sort of what we're seeing reflected in silver over gold. As opposed to so much less of gold's demand comes from actual like production of jewelry and whatnot. So gold silver ratio, As long as we're on the weekly above the 200 exponential and simple now, this trend is just going to grow and grow like, I mean, faster and faster. So the fact we're above the 200 simple right now, it would not surprise me to see this retest like 82. But really, really strong right now. I mean, we almost already hit my target of 80 with that little like spike up here. I'm sorry, 90. Looks like it probably wants to go higher to like that 94 level. Might be the beginning of a multi-year trend where gold strengthens compared to silver, which could be a combination of bullish and bearish things. But, you know, overall, this chart is not good for silver. Silver's chart is not good for silver. And gold chart looks like it could go either way. So the gold chart's not telling us much of anything. It could go higher, it could go lower. It could be accumulation, it could be distribution. We could put in new highs, we could retest the lows. The silver chart is telling us weakness for sure. And then we look at the gold to silver chart, it's telling us weakness as well, especially on longer time frames. So regardless, if gold holds up or not, silver probably goes lower. If gold doesn't hold up, silver probably goes much lower. It seems very unlikely that gold goes higher and silver doesn't go higher at these levels, because silver tends to outperform to the upside, at least later on in the cycle. So maybe we're getting the beginning of a big bull market breakout in gold after we put in new highs, you know, only a couple of years ago. And this is just the beginning of some massive gold rally going into the next like 5, 10, 20 years. And silver just won't keep up initially. It's possible. But those are the scenarios where we typically see gold and silver related to each other and how they perform. So ACB on the daily. So it did reclaim that key support level, which is definitely good. So maybe this was a capitulation, kind of like throw over. We see some bullish divergence developing here. Is it a tradable bottom? I mean, I would like to think possibly. But this is probably going to be, I mean, trying to call a bottom on these pot stocks, in my opinion, is just, you know, pointless. Oh, man. I mean, this is it, realistically. I mean, ACB goes any lower than these, like, $2. I mean, the wick down was basically 2 at or to a new low from 2015 levels. So, I mean, this chart looks so bad, honestly. You can't really say anything good about this chart. You have to basically say, like, hey, at least we're holding the one support that's left on this whole chart. Because this really is like the, you know, this is the, you know, the last stand for ACB. There's just nothing left. I mean, it's at $2.78 one, so it's basically a penny stock at this point in time. But I mean, two, there's just no support any lower. So, you know, the last thing we want to see after a multi-year meltdown is price discovery to the downside with no support. Not trying to sound overly bearish on these. Maybe that's what the market needs, though, too. Maybe the market needs a lower close and people to just completely lose faith. I can't imagine after this that's taken place, though, that there would be that many sellers left. I mean, it's just completely melted down. Anybody that's ever bought this thing, if they didn't sell, they're negative. And if they did sell, they're probably still negative. But, I mean, again, we don't want to just try to call a bottom here. But if we get another one of these bounces, you know, we don't want to get too aggressive, but just a retest of that previous support level was 55%, and that comes in somewhere around the 200 exponential and simple. So, you know, these are really some to watch. We're also building, you know, we have that daily bullish divergence that just printed. You know, after this, the cross of the stochastics, we bounce the stochastic and we put in a higher low. Well, we put in a lower low on price action. So again, I mean, it's short time frame stuff. We already had a pretty big move after that. But there could be some gas in the tank still on these pot stocks. Again, we talked about this already. Essentially taking that setup on Tilray with the 73% move back to the upside for a retest of the previous high in the 200 exponential and simple. So You know, we're not going to just keep getting these easy 50% plus moves forever. But while we are getting them, I mean, it makes sense to take advantage of them. It really does. So this is one I'm really looking at. Tilray has been overperforming on a lot of these bounces. So we're waiting for it to happen on some of these other pot stocks. And Tilray is already done. The move has already happened. Again, at that sort of like, you know, last stand area for support. But I mean, nothing. I mean, the histogram is technically passed back over on top of the slope line on the weekly. So that is at least a beginning sign of, you know, potential bottom. I mean, one little hint of a possible bottom one day into the future, probably at much lower prices. that's kind of how this chart looks. And this just looks so bad. I mean, again, this likely will be the lowest low monthly close on Tilray ever. So just very, very bad. You know, all green histograms too, while we just continue to melt down over the last, you know, almost 2 years. I mean, this chart's not really giving us much useful information, but we don't want to see this level go down any further. But there has to be opportunity in some of these pot stocks. CCJ, it's just tough because every time we try to get bullish on one of these pot stocks, I just think about people I know personally or all the people out there that are just upside down on these things, and how at this point in time they've had to deal with not only price capitulation but time capitulation as well over the last like 4 or 5 years, while capital was completely tied up, while every other investment you could have possibly made, anything you possibly bought is probably worth more now, except for pot stocks. But at the same time, how many of those people have not sold already too? So there's sort of like that kind of tug of war where there's an argument that it's going to be hard to have a sustained bullish move to the upside, but arguably it's going to be hard to go much lower either. Just because, I mean, seller exhaustion is a real thing after time and price capitulation, like what we've seen in these pot stocks. 98% and, you know, 5 years from the highs, new all-time lows basically. So there's real opportunity there. You know, 5 to 10 years from now, a couple of them probably won't exist. Doesn't mean that they don't still perform because they get absorbed somewhere else. But some of those pot stocks are probably going to be, you know, the trade of the decade. As we'll see, you know, 10, 20, 50 X's on some of those things. But again, some will go to zero. So they're, you know, it's all about proper allocation. So that being said, CCJ, onto our uranium. So just, you know, nothing really happened in the last couple of days of price action. We basically just hung out at the 200 exponential and simple. Decent amount off the lows. Still expect further downside in these uranium stocks. You know, we broke down from key support. Look pretty tired, kind of topping out here. And it looks like they're starting to just kind of roll over. On this chart specifically, we don't see as clear of divergence, but here we see a high and we see a very, very slightly lower high here. And then here we see a high. Here we see a slightly higher high here. So it is bearish divergence taking place on the weekly uranium charts. But I'm not overly bearish on these things. I'm really looking to buy the dip at like probably 200 exponential or one of these previous Fibonacci levels. So again, looking for some opportunity over the next couple of weeks again to re-enter on some of these uranium stocks potentially. URA next. Well below the 200 exponential and simple. Let's zoom out on this one and see what's going on here. So almost got the retest of 200 exponential. We do have a slightly lower target. We may not get that low though. I don't want to miss an opportunity to enter this at the 382 just because the ideal entry would be the, you know, 0.5. So again, something around starting to enter or build a position again back in like the $17 all the way down to like the $13.80 range looks ideal. We don't see that same bearish divergence developing on this one at all. We just see, well, we don't see it on the TJD, TDMACD. We do see it on the stochastics actually. So we're seeing a little bit of bearish divergence here on the stochastics, but not on the TJD, TDMACD. So less confluence, a little bit weaker on the weekly, but already down at the key levels we're looking out for. So may start adding to this position sometime. And just to kind of clean it up again, this to me looks like the beginning of a macro long-term bull trend. This is literally, what we wait for. Because, as much as we like to trade and it's fun to scalp in and out of positions, this is a trend going back to 2010 on this one specifically, and it was already melting down into 2020. So we're talking about 10-year meltdown of bear market, clear, just capitulation. And then we confirm back on top of that, back here in, December of 2020. We flipped the 200 exponential and simple bullish in January of 2021. And I've been, obviously a big proponent on uranium along the way. And now we're seeing, the 200 exponentials on top of the 200 simple. That's very bullish. And we are, building momentum to the upside. And now we're getting sort of that reversion to the mean retest. The same way with when we break down below the 200 exponential and simple, we get a retest to retest it as resistance. When we break above it, we tend to come down and retest it as support. And when that support holds, or if that support holds, we then confirm into a bull market, which this bull market, again, could go on for years and years into the future. I mean, I would expect, a minimum, 3 to, who knows, 20-year bull market on this thing. So the positions that we enter into now, compared to previous all-time highs of 131, it's at 20 now. Just a reversion to our previous all-time high, gives us a $110 gain on a $20 position. So over a 5x. And then, assuming that in the future, commodities in general just cost more than they've ever cost before, whether it's from inflation, whether it's from scarcity, whatever the reason is behind it, or your macro thesis, it makes sense to think that commodities probably do cost more in the future. So it's not unrealistic to think we see higher prices on some of these uranium and, gold, silver, other metal mining stocks, which is why I think that, again, those will be some of the best positions looking out into a like 5, 10, 20-year time frame that could see some short-term, weekly, monthly, even 1-2 year retracements or consolidation. So UBC on the daily, again, slightly below 200 exponential and simple, trying to do something on the daily here, build a little bit of strength. On the weekly, though, we see we're very close to our support level, very close to the 236. We're very close to an 821 cost of downside. We have a hard sell signal. We don't see that same bearish divergence developing on our TDMACD or on our stochastics. But again, we see that same, pattern taking place where we basically had a very elongated consolidation back from 2007 with a peak high at 935 and currently trading at 337. So we're looking at, a couple hundred X's or a couple 100% rather, or a couple X's on our uranium stocks. But definitely does look like it wants to come down short term. And then UROY, again, weakest as of late. Doesn't look particularly great right now. But it is starting to reach some of those key support levels as well. I don't want to rule out a new low, but realistically, we want to see a bounce off of this level. And then, if that fails, come down and put in a new low. We don't want to see a higher low bounce and then just immediately break down from there. That's going to show weakness. We do see that hard sell. We are seeing a little bit of bearish divergence as we basically have that same high right here in the stochastics and lower high here on price action. But again, definitely seeing a little bit of a mixed signal from a couple of the smaller uranium stocks. Getting a more clear picture from like Cameco and even URA. So Hex is next. So this was crypto requests. So we'll take a look at it while we're here. So new horrible weekly close on Hex, as we were discussing last week. New weekly close and just very bearish. So again, continuing with a high, a low, a lower high, a lower low, a lower high, and then again lower low. Doesn't have to be the lowest low, but it is so far. So we would expect when we put in a brand new record, low, that we just follow it with just more and more lows until the markets tell us something otherwise. So the next main support, I think, looks like around like 5.5 cents. Could see it come in. I mean, depending at how we look at this. Again, not like a true 5 waves down, just kind of showing this consolidation in this descending channel, which is actually a bullish pattern. We probably do get a breakout to the upside eventually. Well, more often than not we will, because it is technically a bullish pattern. But Hex looking pretty rough right now. Looking pretty rough. Losing that support. We talked about this last week. It looked like it was about to let go and look very bad. And then obviously we discussed this short position, which has played out extremely well. I didn't take this position, but the actual setup, has. And obviously none of this is financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. Not sure. Did I talk about Altria on the last stream, or was I supposed to talk about it this stream? Can't remember. So basically we had that breakout. We had a pretty heavy retest. It doesn't look that bad here, but this just had a pretty big dump, 10.5% from the highs. Another retest of a 200 exponential and simple. We have a long-term support here in yellow, which is substantially lower. But we are to our target of around $50 roughly. And this is one of those ones that could do quite well in a recession. It has a nice dividend, which is obviously a benefit. They are, tobacco-based, which, tends to do well in recession scenarios as well. Zoom out here and take a look at the weekly. We have basically reclaimed on the weekly that 200 exponential and simple. 200 exponential is angled to the upside. 200 simple looks like it's about to roll to the upside. It's basically a flat slope right now. Now we are getting the divergence signal, sell by sell, but that was right before the capitulation took place. And this really just looks like the reversion to the mean play. So an entry right here around $50. Essentially what we're looking for, ideally, is a situation like this, where we basically have been in a bear market, and then on the weekly we reclaim that level, and then on the retest we enter our position. And just looking at the last time this took place, which is obviously doesn't have to happen again, but that trend started in 2010, and then until this confirmed into a bear market in 2018, it was a 215% move to the upside, and just a nice solid dividend paying position that you could just sit in that was in a very powerful bull market. And the signature that we're seeing right now, again, like we talked about on those uranium stocks on the weekly chart for Altria, is basically what we're getting right now. So this opportunity right here, likely, assuming it holds and, the trade plays out how we want it to and how it looks like it will, this likely results in, a multi-year couple 100% move back to the upside. And that's the position we're trying to get involved in. Now, just a retest to the previous all-time high from like that 2017 level is about 57%. And it might not take that long to get there. It might be months or a year, as where the actual trend itself could last, a couple years or, a decade. And then if we switch out to the monthly, this basically looks like our bounce off the 200 exponential and simple, grinding out a low, and then just continuation to the upside. So building momentum now, stochastics angled to the upside, finding support, about to enter into the bullish control zone. Still bullish posture on our moving averages. And then again, we found support at the 0 line, multiple green histograms above the 0 line, and the slope line just now flipping blue on this. Again, man, I feel bad if I went into this detailed. I don't think I did last stream. I think this was one of my ideas that I wanted to talk about for the macro thesis. But if I went through all this already, hopefully it wasn't in as much detail or you guys didn't see it. But if it is, sorry for the immediate redo. But I don't feel like I talked about it. So hopefully not. But regardless, Altria, looking like a potential long-term play here. Again, we're talking about a multi-year potential cycle here. So even if we retest all-time high and we get a nice 50% move and then we take profits and see what happens from there, on the monthly chart, this thing looks like it's ready to go for like years to come. So this is a big one I'm looking at. And if the markets are going to underperform, if we're going to be in a recession, if it's going to be a weird situation where rates are rising, something like this, going into a bull market, paying a nice dividend, a nice big company, big market cap, consistent dividends, long track record. These are the ones that will perform well, in my opinion. So yeah, that's it. That's enough. And also, don't smoke because it's bad. It's bad for your lungs. You don't want to get the cancer. All right. So let's do some cryptos. All right. So sorry, I was looking at the list. I have one more request I actually forgot to bring up here. Well, I mean, I didn't forget to bring it up. I just haven't actually done it yet. So same thing though. Not sure what is going to have good history on this. I would imagine that should be okay. Okay. All right. So yeah, let's take a look at our cryptos. CW says, I've been using PSQ and SQQQ for shorts of QQQ and try not to hold more than a few days. Also trading the VIX in a similar way. Yeah, you definitely don't want to be holding those positions long term, but they're great for hedging, or like you said, those scalp positions for sure. Definitely. Definitely. And if you're not into options, some of those other, yeah, I mean, there's countless tools and it's really about what you prefer. I'm not a big options trader myself, but I can understand the appeal of them as well. For me, I like to trade a little bit more. Well, I can't even really say that. I think it's just a different style. I mean, realistically, you're kind of just going for like that all or none, which is okay because you're just taking smaller positions with leverage. So, I don't really have anything against options. I think probably the main reason I don't use them is I just don't really need leverage that much. I think if I was trying to like build up my account or something like that, I would be more likely to use leverage or options to do so. But it's not really an issue for me, so I'm more like conservative when it comes to them. And also, we're not in like some raging bull market, which is tends to be when leverage and options are, most likely. You're trading with a trend into strength. But Bitcoin futures chart. So closing down here at the lows, right at that same level we've been talking about. Basically like I think 30,670 for whatever reason was like the number that kind of resonates as our resistance slash support. So as long as we're under it, it's acting as resistance. When we're on top of it, it's acting as some kind of support at least. So right now, we're basically just sitting at support or slightly below resistance, which is not good. We want to see, aggressive rejections of support, and then we can start to move away from it and build strength. we don't want to see we just break down to a resistance or to a support rather, and then just go sideways, because we're probably just going to break down again. We're seeing some bullish signs on the chart. We do see a hard buy signal coming out of the bullish control zone daily. We do see a bunch of green histograms on the daily. We are closing at the 8 on the daily. So it is possible that we get that retest of the 21 and a push up to like 33,000. 10% move on Bitcoin. Nice move on altcoins probably, as most of them are beat down. But the chart is very bearish. It's very bearish. I'm going to be watching 4 hour for a potential bullish scalp on the daily. But looking at the actual like weekly and monthly chart, they're very bad. The weekly is all red histograms. We almost retested a 200 exponential, didn't quite get there. So maybe we have another retest. We probably sweep the lows here. Again, not only did we have a very bearish weekly candle with a new low that got bought up, we closed another weekly low lower than that close as well. So it sort of gives back like any potential of saying, oh, that was a bullish rejection, and now we're just going to immediately go to the upside. If we were going to see continuation, we probably would have saw it last week, and we did not. We see a hard sell. We saw momentum building to the downside. So the weekly looks very bad. And then the monthly chart, we're very close on the CME futures to an 821 cross. When this monthly closes, this will basically be, the two things will be touching, the 8 and the 21. And then maybe we get that retest up to like 36 to 38,000. A nice aggressive pushback to the upside, 20 to 25% move in Bitcoin, 40% move in some of these altcoins. And then we get rejected and go lower. But that's basically our retest of the breakdown from the 21 that gets rejected. And that's assuming it doesn't just happen in the next week, which I don't think it will. But we could have this monthly candle push all the way back up, and then it's like, oh, that was a bullish bottom. And then we get something like this. It's possible. Anything is possible. Don't see it being likely, but it's possible. And then our Bitcoin bit stamp chart. Again, we see the hard buy coming in. Quite a bit of price action. No price action. Basically just oscillating in this range, while the indicator oscillators trend up fairly aggressively. So you see a bunch of green histograms. Price action has gone nowhere. We see, we have gone from the bearish control zone at 20 all the way up to 40, and price action has gone nowhere. So we have to be very careful right now, because to me, what this looks like is it looks like a bearish reset, where the indicator oscillator trend back to the upside, and then we just go lower. We saw it happen right here. We got the hard buy signal. We kind of just trended sideways. Nothing happened. We got all the way back up to like the 37 level. We got a bunch of green histograms, the hard buy all in a row, and then price action just went lower. So the bearish reset is basically the indicator and oscillator trending back to the upside, while price action goes sideways to down. So price action diverging away from the indicator, and then eventually the indicator does the same as price action, and they both just melt down. And that's what we saw reflected in that last dump, which we expected, obviously. But, I know a lot of people got caught with their pants down on that one. I don't think people were expecting crypto to drop from, I know people were not expecting the 48,000 to 30,000. So I get it. Not a lot of people saw this as a flag, and we were expecting a bearish breakdown. But I think a lot of people really got, extra salty with that like 40K or like 38K down to 30K. And now at this point in time, crypto is hanging on by a thread, and there's no denying it. Big time danger zone. Big time danger zone. And obviously we talked about the similarities we saw here and expecting this capitulation move. And, obviously we got it. So congratulations to us. Does the next push down now take us to 22K or 20K to retest the 200 simple on the weekly and the previous all-time high? Likely does. Hard sell signal on the weekly, bunch of red histograms. The bullish divergence, the bearish divergence played out and we broke down. The bullish divergence played out, we broke up. We got rejection at key levels. I was very, very clear. We voiced our opinion on it for week after week after week. We have now just been completely melting down. But again, this is the area we would expect to find some kind of support at. So maybe we do just have one more brutal week or a couple more brutal days, followed by a nice bounce. Equities are at support in many cases, as are cryptos. So that being said, let's look at our Ethereum chart. Again, breaking down at the lows. We're seeing the oscillators and indicators trending up, but price action going sideways. So looking like a bearish reset. We did get the retest of 200 exponential almost perfectly. 200 simple is quite a bit lower at 1200. So the next real target is 1600 and 1200. We already hit the 1600 target almost perfectly. And again, that 1400 was the previous all-time high on Ethereum from 2018. So we don't have the same history with Ethereum as we have with Bitcoin. But if the argument stands that we don't want to take out our previous all-time high, Ethereum can't really go much lower, as it went to 1600 and the previous all-time high was 1376. So there's not a lot of meat left on the bone for Ethereum to go to the downside without starting to violate key support levels. All red histograms on the monthly. The stochastics are, accelerating away from each other. The 8 and 21 look all but inevitable to cross. Crypto looks very bad right now. Very, very bad. So Bitcoin dominance. So we got the breakout after the triple bullish divergence on the weekly. Got the breakout of the channel. We consolidated for a week. That's all I said. I don't need it to go higher. I don't want it to go lower. If it consolidates here for a week and it opens a weekly outside of the breakout and closes a weekly outside the breakout, I'm extremely bullish. Doesn't mean we don't get the retest of the support line or of the 8 and 21, but it tells me that we're more likely than not going to see continuation. So our next main target to the upside, after maybe a slight pullback to like 44, maybe 43.50, would be 51. So 51 is our initial target to the upside, the measure move of the channel breakout. And then after that, it's a retest of 200 exponential and simple, which is 56. And that is probably a confirmation that cryptocurrency is melting down if we see that taking place. Total market cap looks very much like the Bitcoin chart. We're at support. We did touch a 200 exponential. We are seeing the hard sell signal and all red histograms. Again, total market cap, if we break down lower from here, we would expect support at 1 trillion and then at 840 billion. But very, very bad right now. So Matic, again, seeing that what looks like a bearish reset taking place. Not looking particularly great at the moment. New lows on the weekly close. We are at support. We don't want to see Matic go any lower. This is our last support level for what amounts to basically a, neckline potential breakdown. So do not want to see Matic breaking down any further from here. Somewhere around there we would look at like a low. Yeah, so we essentially like touch the 236. And I would say the range we're looking at really is that previous weekly low close and the 236. So, that's the area. We're still technically okay as long as we're above about $5. But if we see a breakdown below $4, it gets real bad, real fast. And it's essentially one weekly candle took us from the 382 to the 236. So if we go down below $4, we have almost no support back to $1.50. So if Matic does break down, which it looks like it wants to, not saying it can't get upside potential first, but if it does break down, we're talking about a target of 72% downside from right now. Now, again, does not mean we don't see a bounce at this support level, potentially as high as, a 40% bounce back to the upside. But I'm not banking on that right now. It does not look particularly good. At support, though, so again, it looks like a lot of these things want to have a bounce in the next day or so. So if we see some 4-hour to daily short-term bullish divergence, capitulation candle to the downside that gets bought up pretty aggressively, it's probably going to look like an entry opportunity on a lot of these equities and cryptos. Avalanche looks like it's melting down pretty badly. We did come down to 1.618 Fibonacci extension of our previous move. Again, we don't want to see this thing breaking down any lower. Man, these cryptos are brutalized. $31 on Avalanche. No signs of bottoming. Just new weekly lows. Complete meltdown. Solana. Already hit our targets at downside. Same thing. The indicator oscillators are trying to trend up bullishly, but the price action is not going anywhere. I mean, if you didn't buy like the wick that sold off, you're probably losing as it's slowly just bleeding out. New weekly lows. Losing the 618 at support on the weekly was pretty big. Solana looks bad. I mean, it looks likely like it wants to just revisit these lows again. Looks like, looks very bad. Very, very bad. Tough markets right now. Markets like people have not seen in the cakewalk markets we've had for the last 10 years, last couple of years especially. These markets are brutal right now. Wow. XMR trying to break back out of that channel, back above it technically. Looks like it just wants to retest the 200 exponential and simple in the 382. Probably around 206, it looks like. Building some strength again. We did get that buy, sell, divergence signal, bullish divergence signal, at what amounted to a triple bottom. And since then had a very powerful move back to the upside. So again, not particularly bullish on XMR like fundamentally, but technically the chart is still decent. It did reclaim the 200 exponential and simple when very few other cryptos did, and it's seeing at least the bullish bounces, even though it's still in a bear trend. The bullish bounces are at least strong. Now the only problem with this is when we flip out to the weekly, part of the reason we're seeing this thing be strong right now is because it's been so weak for so long. So it has been completely melting down and all the way back down to 200 exponential and simple. Stochastics on the weekly are angled powerfully to the downside, and we're below the zero line, all red histograms and red slope line. So this looks like it's entering into a potential capitulation period, and that most recent bounce was probably just a dead cat bounce before it goes lower. This is much worse than most cryptos on the weekly chart because it's already at the 200 exponential and already has violated the 200 simple. Most cryptos have not done that. So this looks much worse on a weekly chart, much better on a daily chart. But obviously the weekly is where we're really looking, because the only reason the daily looks good is because the weekly was so beaten down that some of this recent price action looked good. Got to be real careful with this one. Yeah, this thing is a trap, honestly. Algo is next. So again, pretty beat down. Continuing to show, same type of thing on the daily. Weekly, there ends up being quite a bit of support going back to 2020 through this level. We don't want to, I might have just pulled up the wrong chart because I thought we had done some TAA on this previously. But we did retest the 618 on the macro. If we fib from the lows at like 10 cents to the highs at 280, we closed another new weekly low, which is obviously bad. We would expect 618 to hold up. This is the last line of like bullish defense. If we violate the 618, we're looking at the 786. So that's 20 cents. The 618 is at 35 cents. So we got a little bounce off that already. We gave back most of it. And it looks like, again, we're going to come down here and sweep the lows. Now, maybe we get a double bottom scenario, and then we can get a push all the way back to the 0.5. But again, that's going to look like a selling opportunity or a scalp opportunity up to about 53 cents. Not from here, obviously, because there's been, we're basically in the middle of the 0.5 and the 618 right now. But if we come back down, sweep the lows, and revisit them, there's definitely some potential for, a scalp move from the 618 back to the 0.5. Again, if Bitcoin has a 20% bounce to the upside, we could see a lot of these altcoins have like 40 to 60% moves back to the upside. But again, they're going to look like scalp or selling opportunities. Very, very weak. Most of these cryptos are. Very bearish. XRP, again, just kind of going sideways at the 382. I don't know if I expect this to go lower from here necessarily right away. It is confirming a weekly bear market now. So, man, this thing is rough. So it is below the 200 exponential, below the 200 simple, and confirming slopes to the downside. So bear market. So at some point in time, we'll expect a reversion to the mean, bear market rally. We don't know where it comes from. If it comes from here, we're looking at like 15 to 30% move. But again, we could easily sweep the lows, and then the move could be from like the mid 30s back up and be closer to like a 46 to 65% rally. But again, that's just the reversion of the mean before we just go much lower, probably straight to zero. Probably immediately straight to zero. Just one big candle, straight to zero. Just one of those crypto implosion candles. Cardano, bouncing support, hit our target. I don't want to get overly bearish on Cardano. I mean, it's already down substantially from its highs. Obviously we closed our scalps on this a while ago, and I have not touched it and would not touch it with a 10-foot pole. But I mean, could you be shorting this thing into oblivion right now and just absolutely crushing it? Oh yeah, for sure. For sure. I mean, from $2, I mean, you'd be up, you'd be up 75% on your short position at this point in time. Not even assuming you shorted some of the divergence that was showing up and, the higher price levels. Cardano looks rough. It's at the 200 simple. It's holding on for dear life right now. New weekly close once again. Hard sell signal at the bottom of the range though. Not super reliable, but probably was just a bullish or bearish reset on the indicator oscillators before, lower prices. We see that already playing out. Probably just going to revisit the lows at 382 again. So we got that dead cat bounce, and then everything kind of got that like little reaction rally, and then it's kind of just bleeding back out. So we probably start putting in like sort of a rounding bottom, and then maybe we get like, shorter term, like on the daily, we start to see something that looks like kind of an atom, like a V bottom, and then a sort of rounding double bottom like Eve, and then we start watching the necklines for the breakout for our reversion of the mean plays. Sort of like our actual like bounces for potential scalps or new entries for short positions, because we really should be selling into these rallies, whether it's closing positions or shorting positions or scalping positions and closing them. That's what we're really looking for, to be trading with the trend. But again, Cardano looking pretty rough. And then we have KNC, Kyber Network. So the reason this was brought up, this was a request, because this recently put in a new high. Is that an all-time high? Yeah, that's a new all-time. Well, it's a monthly close high last month. Technically not an all-time high though, from 2018, because we did have a wick up higher, slightly higher. So not to nitpick, but it's not technically a new all-time high. More of like a double top. It's not a new all-time high for closes on the weekly either. So is this really? I mean, so there's two ways you can look at this. It was outperforming lately because it just put in a new cycle high. So sure, it was outperforming lately because it put in a new cycle high from April, and most things did not. But it's underperforming substantially from 2018 because it's basically just now gotten back to its all-time high. So while some people would look at this and say it's more bullish, sure, recently it's more bullish. But again, it's very, very bearish long term. Any cryptos that were around from 2017, 2018 peak and then didn't put in a new all-time high, or at least a decent amount of gains. I mean, even if it's not thousands of percentage of gains from the 2017, 2018 all-time highs, you don't want to see a double top. You don't want to see a lower high. You want to see a substantially higher high. You want to participate in a bull market and make money even if you were holding bags from the last bull market. If that's not the case, this asset is much, much weaker than anything else that did. And, of all the cryptocurrencies that existed from 2017, 2018 to now, I mean, it's probably hundreds, probably a couple thousand maybe. Most of them, 99%, I would say, that are still a functional cryptocurrency that people are working on, that you would trade, not just some obscure coin that's named that nobody talks about. Like, let's say, of the last bull cycle, any of the ones that were trading in the top 100 or top 200 cryptos, any of them that are still relevant or decent or worth investing in should have put in a substantially higher all-time high this time around. You know, Bitcoin was 20K, it went to 70,000. Ethereum was 1,300, it went to over 5,000. You know, even Cardano was, I think 220 was the previous all-time high, or 260, and it went over $3. Like, that's what you want to see from a semi-healthy or at least like higher tier cryptocurrency or any asset from a bull cycle. You want to see a new higher high. Anything that doesn't put in a new all-time high or puts in a double top or a slightly lower high is not good to me. So again, short term, sure, it's more bullish as of late because it put in a new all-time high. Long term, looking at this chart, it looks terrible to me. This is terrible. You know, if you invested in this in the last couple of years, sure, if you bought the bottom, you did great because it was 12 cents and then it went to $5.50. But what we look at really is from one high to the next high. And this has failed. So I would not be bullish on this. It does look like it had a nice little run up as of late on the daily. You know, obviously you could have very much traded the 200 exponential and simple, you know, 821 cross, bullish trend going on here. But now again, we have lost those levels. We sort of reclaimed them. But is this just a breakdown and then reversion of the mean and then we're about to go lower? What does the momentum look like on the weekly? Yeah, see, hard sell, left the bullish control zone, retested the weekly 200 exponential and simple, all red histograms. Yeah, I would be real careful in this one. I mean, it just broke down to the 200 exponential and simple almost perfectly. Yeah, I don't know. I mean, again, though, you could argue, well, maybe this is just the beginning of the bull trend. It's only just getting started. But what would cause, I don't know enough about KNC, Kyber Network. I don't know enough about it to make a strong fundamental argument for why all of a sudden this thing is going to decouple from the rest of the cryptocurrency space. And it's just going to go into like this awesome bull market to the upside and just keep going. Maybe there is one. I just don't know what it is. And that's what I would need on that weekly chart to be bullish on it. Yeah, I don't know. I really don't like this. I mean, I get what you're saying about it putting in a new local high and recently, and that was definitely a tradable situation. But a lot of times, as crypto is like not doing much, you see like sort of like these, I don't want to call them like, you know, Reddit pumps, but that's kind of what it is, where it's this one crypto is going up, everything else is going down. So a decent amount of money, enough to move that crypto, piles into it for no reason other than it's going up. And then once that one breaks down, you know, that flavor of the week or month or whatever is over, and then it's on to the next. And that's probably what this pump was. This looks pretty mechanical. You know, it's basically just a straight up like channel. I suspect it was probably, I don't know if it was someone necessarily trying to like, what am I looking for? What do I want? Oh, I was thinking the regression channel, right? That we could do. Something like this is what I was thinking. You know, that's not going to work on this one. I'll have to use the regular channel tool. I mean, this kind of like outlier breakdown right here slightly, but for the most part, it's something like, you know, kind of this was taking place, where it was basically just being marched back up. This was the reversion of the mean retest on the daily, and then just continuation, and then the breakdown from the channel, 821 cross the downside. That was sort of the end of it. You know, and look at how mechanical, and it just gave back the whole entire move to the upside immediately. So there was no resiliency in this price action. I honestly would not be surprised to see this thing just go back into just a dead chart, as whatever caused this recent pump or people to be interested in it, since that like January low, whatever caused this pump over the last couple of months, was just completely wiped out and given back. And I suspect this is probably a 50% retrace of that move. Oh, sorry, wrong. Man, my drawing tool skills are a little subpar at the moment. Like, can't find the tools, clicking on the wrong stuff. Okay, 618. So yeah, we're at like the 50% now, but it came up almost exactly to the 618. So that looked like basically the dead cat bounce, 50% retracement before we just come back down and probably put in a new low. We probably retest these lows, that like 80-cent area. Again, this is kind of extrapolating out into the future for a hypothetical situation that may or may not happen. But that's what I would expect, is probably this just melts down again, and then the target ends up being for the next drop, probably down in here. So we probably do see something similar to, this is topping out and then another leg down. Something like that. Which, again, depending on how you want to look at this, it's really compact how this is played out. But it's basically just a, bear flag where we essentially see a leg down, and then we see like a channel or like ascending, sort of like a retest back to the upside, or ascending kind of move back up, followed by, basically just another leg to the downside. So assuming that it had already topped out, that same move to the downside would give us roughly a retest of that level. So that looks pretty likely right now. It looks pretty likely this is going to retest 80 cents, which is devastating. I mean, from where we're at right now, because this thing's at like 260. So if we go put in a new low, we're talking about 68% down from here. It did just put in a brand new all-time high, but new cycle high, whatever. But from that, that's 85%. So there's people that bought this in April at the high that might be about to be down, 85% from that purchase. So not good. These cryptos do not look good. Again, a couple of them have a better chart on like a longer time frame or a shorter time frame, or whatever. But overall, the whole crypto market looks terrible on most time frames. But yeah, that's all I have for today. What did we do time-wise? About an hour and 30 minutes. So we're doing nice. I'm trying to kind of shorten these up a little bit. I know a lot of you guys are very busy, and as people get back to like more normal habits, and I'm streaming 3 times a week now, I don't want to like overwhelm you with a backlog of videos you don't get to watch. So I'm trying to keep them a little shorter, closer to like an hour and a half. So all right, so let's see. Wrap up with some comments here. If you did enjoy the content today, make sure to like and subscribe. Call him Betty. What's up, man? Bitcoin 10K. Keep up the good work. Thanks, brother. Yoda says, very, very weak. Most of these cryptos are. I like it. Now you're talking like Grandmaster Yoda. Yeah, just keeping it real, Yoda. And then Yoda says, or rather now talking like Grandmaster Yoda, you are. Better stick to my character. Yeah, what's up, Jayhoff? Good to see you. Appreciate the comment, man. Definitely glad to share with you. Always glad to bring these rundowns out. Yeah, we're going to go ahead and wrap it up there. Going to be a crazy week in the markets. Looking for, in the next couple weeks, whether it's this week, turnaround Tuesday, next week, turnaround Tuesday, maybe beginning of next month, looking for a reflexive rally after these like 7 to 8 weeks of selling off in most of these equity markets. So I kind of expect a sort of an opposite week or so, maybe opposite 2 weeks. Everything that's been selling off, all of a sudden bouncing. Everything that's been bouncing, all of a sudden selling off, or been, trending upwards, all of a sudden selling off. It doesn't have to happen like that, but seems very probable. A lot of these assets have reached key supports. We're seeing a ton of confluence between our key Fibonacci levels and horizontal supports, previous 2020 all-time highs, and then also our moving averages, 200 exponential and simple moving averages on a lot of our weekly time frames as well. So looking at crypto and also stock market on the 4-hour and daily for potential like shorter term divergence and, some sort of sign from the market that we want to build a little bit of momentum back to the upside for some potential scalps, or alternatively, re-hedge positions or re-short positions, etc. Like selling those rips into what is very, very clearly bear market. And we talked about this months ago, how I said basically we're already declaring a bear market based on technicals because we declared a different way. And then by the time the rest of the market, by the time the rest of the talking heads, influencers, analysts are talking about bear markets, we're already going to be down, 20% to 30% on the indexes, let alone individual stocks. And now here we are, the exact situation has played out. Many of these stocks are down 30, 50, 90%. The major indexes are down, NASDAQ down 30%, Dow and S&P down 20%, Russell still just a pile of steaming poop. And now here the market, everybody's like, oh, we're officially in a bear market now. Congratulations. You took a 20 or 30 or 90% haircut, and you're now able to confirm that we're in a bear market. What use is that ever for trading, for investing, for anything? It's of literally zero use whatsoever. It's just a number that you can point out and say, we're officially in a bear market, but it's of absolutely no use to anyone because a lot of times the 20% mark will be the bottom, or at least a tradable bottom. And most of the time, by the time you're down 20, 30, 50, 90%, you're a fool to be selling because you already have missed a massive opportunity, or now you're upside down on a position. So absolute blunder from all of these influencers, talking heads, whatever you want to call them. Just absolutely hilarious seeing how this is all played out. And, we're down a lot already. And I just want to further stress the point because I am normally very bearish when the markets are bearish. And I have been lately, and rightfully so. I've been right for months now. But that being said, I have been talking a little bullish on this stream. And we are looking for a potential scalp and some like quick 10, 20, 40% gains. But that is exactly all it is. Just scalps. I'm looking to get in, get off, get out. We want to get that nut, lock in those gains, and then get back, into safety because I do not see an end in sight for these right now. There's a big difference between a tradable bottom that can still have massive gains and an actual bottom. So the tradable bottom we're looking for now really is a scalp or reflexive rally or an algorithmic bounce off of key support. It is not a bottom. It is not a cyclical or secular bottom that we're looking to identify. It is literally just a tradable bounce. And I just want to stress that for anybody, still listening. So I do appreciate all of you guys, all of the likes, support, subscribers, all the group members. I know these times people don't want to log into their accounts. They don't want to put in the work. But the bear markets are where you should be putting in the work, looking for opportunities. And to tell you the truth, in the last couple of days, in some of the charts we looked at tonight, we have seen some serious opportunities. Talking about the uranium stocks, talking about the potential in pot stocks, talking about some of the safety plays and, stocks like Altria. There's definitely some potential out here for some of these crypto scalps as well. So we're looking at some long-term trending positions that we could have for decades from now that could just absolutely, kill it. We're also looking at some short-term scalps that might be, this or next week. So we have some nice time frame plays laid out and some serious potential. So should be a good week. Definitely going to be active in the group. Appreciate all the support. Going to go ahead and wrap it up there. It is 9:39 Eastern Standard Time on Sunday, 5/22/2022. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But everybody have a great week. That is it for today. Crypto Trend Trader with our Sunday evening market look ahead. Make sure you check us out for our Wednesday evening stream at 8 p.m. Eastern Standard Time or our Friday weekly market wrap up on Friday at 11 a.m. Eastern Standard Time. That's it for today, Crypto Trend Trader. Everybody have a great week. Adam, good to see you, brother. Yeah, I just keep it real, man. That's it, brother. Have a good day to you as well. Everybody have a great week. Good to see you, Ralph, Yoda, J Hoff, everybody else that showed up today. I appreciate each and every one of you. Have a great week.